Good morning, everybody. Well, sort of afternoon. I'm getting this video out late. I apologize. I had someone reach out to me and ask me to make this video, so now I'm making it. We're gonna talk about exactly what is the silver bullet model and how to trade it. And then we're gonna talk about some entry strategies that I use for the silver bullet, and it's really only one setup. I'm going to talk about my risk management model, how I keep myself in check, and how I help grow my account. And then we're going to talk about a secret ICT hack or inner circle trader hack that I found. He's never really talked about it that I know of, but it's using his concepts. It's just something that I found in price action that happens a lot. And so I'll share that with you today, and hopefully that will help you if you're trying to trade and you're trying to learn how to do this. Maybe that will help you see some things in price that you may not have seen before. So let's get into it. The silver bullet model. It's a entry between 10 o'clock a.m. and 11 o'clock a.m. New York Standard Time. So my clock is set to, on my trading platform, set to New York time. And then this line is at 10 o'clock. This line is 11 o'clock. So within this time window, there will be a entry in a fair value gap. And I'll show you what those are later. But for those of you who are not new to ICT, you'll know what a fair value gap is, but for those that do not know, we'll cover that. And first and foremost, the silver bullet strategy and how I trade it, I have to know where liquidity is. That's first and foremost. If I do not have a target that I'm trying to hit, then I'm gambling, I'm guessing. And I don't think that guessing is a very good way to trade. It's very hard to put a probability or a statistical edge on guessing. You can guess and get lucky, but if you didn't have an idea in mind, did you really do it correctly? So the first thing that I look at is liquidity. And specifically, I look at session liquidity. ICT has a video called One Trade Setup for Life, and I use the session liquidity that he goes over in that video to really help me with my silver bullet trades. So essentially, I'm going to go to a 5-minute time frame here, and what I'm going to do, you can get rid of that. What I'm going to do is I'm going to show you what ICT teaches. And it's essentially look for where the market is smooth and where it's jagged. Meaning you want to find levels in price where it looks really smooth. See how here, that's a smooth area, along with that high, that's a smooth area. And then below these lows right here, see how that's smooth, that's smooth. You want to look for areas like that. So what I did this morning is in ICT's video about One Trade Setup for Life, I used session liquidity. So there's my previous day PM session liquidity. We're going to mark that buy side. And previous day sell side liquidity, which is right there. So this is what I do. This is the process. I look at first the previous day PM session, which is marked here, the high and the low. And then I look at the London session. And here's the low of the London session or overnight trading. Sell side and buy side. So the first thing that I noticed is that these levels are kind of overlapping each other. They're in close proximity. And so when I see that, I like to see it take both of them, which it did here. It took both of them, whereas up here, it didn't really take both of them, yet it created that buy-side liquidity during London. And we're going to extend these through 11 o'clock. That way we can see liquidity. Where is liquidity resting in the marketplace? So we're going to go back down to a 1 minute chart now. So at 10 o'clock, what I noticed is that, okay, buy side liquidity has been taken. Now I'm waiting for it to see if it wants to trade down to the sell side liquidity. And yes, we already took it here. So then we would mark this as sell side liquidity. That is sell side liquidity. And we would mark that out to right there. So what I'm waiting for is if buy side liquidity has already been taken, I'm looking for it to then trade to sell side liquidity. That's kind of a, I guess you would say, obvious way to look at the market. If it took out buy side, then it should take out sell side, right? And that is exactly the logic that I use. So today is the day before non-farm payroll. This is a day that I typically wouldn't trade just because there's not very clean setups, and you'll see what I mean by that here in a minute. But all I'm waiting for is a fair value gap entry. And a fair value gap is exactly what this is right here. We'll zoom into it so that you can see it. So you have this candle and it makes a low, and then this next candle comes down and it makes a low, and then this candle's high. So you see the area between those candles? That is a fair value gap. It's the difference between three candles where they don't overlap. That's a gap. So you have a gap right there. You have a gap right here. Those are what we classify as ICT traders as fair value gaps. And the market likes to trade into those areas and use that in kind of as rocket fuel to either go higher or to go lower. So after we've taken out buy side liquidity, I'm looking for a trade to go short to the sell side liquidity that's resting below here. So what I'm looking for is a market structure shift, meaning I want to see it break below a low like this, and then start to trade lower, create a fair value gap like this, come back and trade into it, and then move lower. Where it didn't break below this low, I did not take a trade setup. I waited for an obvious break below a low. So you can see here that we hit this level. This is a weekly gap. If you are an ICT trader, you'll understand what a new week opening gap is. It's the difference between where we closed on Friday and where we opened on Sunday night. If it creates a gap, you'll want to use those gaps for at least, ICT says like 5 weeks, something like that. I keep all of the new week opening gaps on my chart, and I can just toggle them on and off. That's how I like to trade. So we hit the midpoint of this gap, this new week opening gap, and then it breaks lower. On a 1 minute chart, like I said, today is not a day that I typically trade because it's not as clean as I would like to see it. So we took out a nice shallow run above this high, and then we broke lower. And this is a nice little ICT hack that I like to use. If I don't see it very clearly on a 1 minute chart, then I will move down to a 30-second chart. You can see right now that 30S, that means we're on a 30-second chart. So each one of these candlesticks represents a 30-second time window. And as you can see, we hit that 50% nicely. We broke below that level. Now I don't want to see it trade above there. Okay. So when I see this come up, I'm suspect. I don't know if it's going to go higher or lower yet. I want to see it trade and break down even lower. So when this trade comes down here, there is a little fair value gap right there. I'll highlight that for you. That little area right there is what I would like. That's where I would like to take a trade. So if I take a trade and I enter a trade right there, and I hold for sell side liquidity, I can take a partial. This is part of my risk management plan, is I like to take partials. So if I have 3 contracts or 5 contracts, however many, you have to have at least 2. But let's say that I have 3 contracts, and my ultimate goal is for it to hit this sell side liquidity right here. I would take a partial. I would take 1 contract off right here below that low. I would take 1 partial probably below this low right there. And then I would hold 1 contract for my ultimate target, which is right there. That way, let's say that it comes down to here and then it reverses. That keeps you in the positive. That makes it so that you make money. And I am of the idea that if I'm going to put a trade on, I want to make money. That's the whole goal of trading. It's not to be right or to be wrong. It's to make money. And I would much rather say, okay, I wasn't right if it didn't come down to the sell side liquidity. I wasn't right, but I still made money. I don't have a problem saying that. And if I'm wrong and I lose money, then I'm wrong and I lose money. If it comes up and it goes up higher like this, then I lost. There's nothing that I can do about that other than look and see what I did wrong and then go from there. So essentially, this gives you a couple opportunities in here to get an entry. You have a fair value gap right here. You have a fair value gap right here. You have a couple small ones in here, like here. And then I really liked this one because we're still above the buy side liquidity pool here. But I really like this drop. And then it came up into it right here and then drop lower. So that is a silver bullet. That's how I trade the silver bullet. Is I first of all have to have a liquidity target that I'm aiming for, and I need to use my risk management, meaning taking partials. So if it comes down and it breaks down, boom, I'm going to take a partial right there. If I have 3 contracts on, I'm going to take 1 contract off right there. I'm going to take another contract off below this low, so right there, and then my final target, it hits, boom, right there. So having a plan of how you're going to enter and having a timed entry model is absolutely, I think, the best way to trade. So my entry strategy, I'm gonna go into a little more depth on that. I wasn't planning to, but I think I'm going to. So my entry, I'm looking for a fair value gap entry from 10 o'clock to 10:18. You're going to say, why are you looking for an entry in that time? Because the best fair value gap entries are going to happen within this time. I've tested this for years, literally years, and the best entries for a silver bullet trade between 10 o'clock and 11 o'clock, it's going to be within this time frame. If I don't get that, I have another time frame that I can look at, and that's 10:30 to 10:40. This is another one of those. These are kind of like sweet spots. So this is the first sweet spot, and this is the second sweet spot. So my entry that I would have taken, it would have started pretty much right here, and I could have entered on this trade right here. I could have entered right here, sold short, all the way to my target, my sell side liquidity. This fair value gap that I showed earlier, it's just right outside that window. We allow just a little bit of leeway, maybe 1 or 2 minutes. So there's 1 minute, there's 2 minutes, it enters, I can go short there, and then like I said, take partials as it hits your targets. And that is the silver bullet. You have to have a target. If you don't have a target, you're not going to hit anything. And that impedes progress. You can't measure your progress if you're just aiming for randomness on the chart. There's nothing random. There should be nothing random about trading. It should be very organized. It should be professional. Be as professional as you can. You think about the most professional businessman that you can, whoever you look, whoever comes to mind in that field, and you say, how would he or she do that? How would they trade if they were a trader? Would they just be okay with, oh, I'm gonna take a trade here and it's not really I don't really know where I'm going? No, they're driven people. They have goals. They have targets that they're trying to hit, and that's exactly what the silver bullet does. Is it gives you a time structured trading opportunity to make money, but also to keep your trading very structured. So that's as much as I think I'll cover on my strategy. I'll make more videos like this that go into smaller nuances, but this is just kind of a general overview of how I trade and how I use the silver bullet. So, secret ICT hack. The moment some of you have all been waiting for. You can go back and you can look at every single hour and track this over multiple hours, multiple days, months, years, however you want to go back. This is something that I use, and it's kind of a secret that I've not really told anybody, but now I'll put it on the internet. We'll see where it goes. So, what you want to do is you want to go to a 1 minute chart, and we'll go back to our silver bullet time. So, between the minutes of any hour, you go to 10:30 to 10:40. Within this window, there will be an entry on a fair value gap. If it is not there on the 1 minute, you go down to a 30-second time frame. Within this time window, there will be a fair value gap entry that if you're aiming for a target, meaning sell side liquidity here like we were this morning, within this time frame, this is a fair value gap. I don't know how to classify it other than a fair value gap sweet spot. And this happens every hour. Every hour you can find a trade within the 30-minute mark to 40-minute mark and find a fair value gap to enter on and to hit a target. So we have a few. We have this fair value gap right here. right there. That's a fair value gap. You have this fair value gap right there. Comes up nicely. You have this fair value gap right here. Nice, just like that. And then you had the one that we outlined earlier, smaller. Every hour, there will be an opportunity for a fair value gap entry between 10:30 and 10:40. It will happen 11:30 to 11:40. Let's just go to 11:30 and 11:40. Okay. 11:30 is right there. So 11:30 start to 11:40. A fair value gap entry. Where's the closest fair value gap that your eye goes to? Mine's right here. See how it comes up into it? Starts to trade lower, it comes back into it a few more times, then goes lower. If you were to go that, this is a very good scalping model. And you take 5 handles, just like that, every time. Your stop loss would be at the top of the candle that makes the fair value gap. Boom, right there, 5 handles, easy. You go to 12:30, and I haven't really looked at this other than what we're doing right here. So let's go to 12:30. So this is unscripted. So you look at this time frame. Where's the closest fair value gap that your eye goes to? Right here. Your entry is going to be right here. So as soon as it comes down into it, 50%, take 5 handles. Beautiful. Stop loss is the low of the candle that makes the fair value gap. So this one, it'd actually be this one right there. That'd be your stop loss. That's your take profit. You go through every hour and it does this exact same thing. This is on a 30-second chart. I haven't looked at, literally have not looked at this other than what I'm showing you right here. So if you go to 1:30 and you do the same thing, so there's 1:30 and there's 1:40. So you're looking for a fair value gap. If you don't have a target, obviously this is not going to work very well for you. You have to have a target, okay? So I'm going to take that off, and I'm going to take this off. So if you break structure like you did here, your fair value gap is going to be right here or right here. And I'll outline that for you. There's a fair value gap, and there's a fair value gap. So if you entered on this one right here, you'd have to allow the bottom of this candle, actually this candle, you have to allow that to be your stop loss, and then your take profit is 5 handles. This is a very quick, easy scalping model. Every hour it works if you have a draw on liquidity. If you are looking for higher prices and you see that fair value gap and it's within that window, that's a beautiful entry, wonderful entry. So there's a little secret, I don't know, silver bullet trader ICT hack. But that's essentially what I wanted to cover today in this video. If you have any questions or if you would like to learn more, reach out. And if you like the video, drop a thumbs up and a comment into the comment section. And I try to get to people who leave comments in the section and respond to them. So thanks everybody. Hope you have a great rest of your day and talk to you next time.